Welcome back to Morning Trade Live. Let's talk Bitcoin. It's one of the riskier risk assets in the markets, but one firm is looking to limit that risk for its investors. Joining us now is Matt Kaufman, head of ETFs at Calamos Investments. Matt, thanks so much for joining us. You're live at the CBOE.
That's right. Yeah, thanks for having me. Appreciate it.
All right. So, Matt, tell us about these Bitcoin protection ETFs you're launching.
Sure. We have launched the world's first suite of protected Bitcoin ETFs. The way that I like to describe it is you can now get exposure to the price of Bitcoin with a safety net. You can choose whether to put 0% at risk, 10% at risk, or 20% at risk. And then you get an upside cap rate relative to the amount you've put at risk. So we're seeing the 100% protection product, CBOJ, has a cap rate of about 11.65%. And then the 90% protection level, or a 10 floor, has a cap range of around 30%, and then we're seeing that 20% CBTJ with an upside cap range of around 50%. So if you buy in today, you can buy in right at that starting NAV, around $25. At the end of the day, we'll strike that cap and you'll be able to get Bitcoin exposure with protection over the next 12 months.
How do you actually provide that downside protection?
Yeah, it's a great question. So we use options in order to do that. The way that we like to describe this is, if just to go through a quick scenario, if I gave you $100, we would have about $96 in a portfolio of U.S. Treasury bonds. Those are zero coupon bonds that are going to accrete to 100. So that gives me about $4 to play with. And I'm going to buy a call spread on Bitcoin. And we buy that on the CBOE, it's options on the CBOE Bitcoin ETF index, trades right behind me here. And so we use a call spread that's going to net out to be the cost of about $4. That's how we build this. So we have a really liquid options marketplace. We have a really liquid spot ETP marketplace for Bitcoin. It's one of the largest assets in the world. And so we're now able to deliver a risk-managed experience, which I think a lot of people have been on the sidelines waiting for.
Right. So, but without risk, there is no reward. So I guess on the flip side, how much of that reward are you actually capturing if only a few dollars of that $100 is going towards Bitcoin?
Yeah, that's right. There is no free lunch, but if you think about your risk-free rate, what you might get from a CD today, you might get 4% or so, and the upside of that 100% protection product is about 12%. So you're getting about 3 times the risk-free rate with no downside risk over that outcome period. We're seeing people tie their cash, it's safe money to that type of product. And then if you want to put money at risk, put 20% at risk, then you can get a higher upside cap, maybe around 50% or so. So we're giving you the opportunity to choose how much money to put at risk and then get the upside of Bitcoin in that protected manner.
What types of investors would these be suitable for?
Yeah, there's some really large asset managers who are asking you to sell Mag 7 exposure in order to get access to Bitcoin. But we don't really think you have to do it that way. Using the protected Bitcoin suite, it really opens the portfolio. So now you can maybe sell from your equity bucket and move into the 20 floor. You might sell from your high yield or your bond bucket and access the 10 floor, the 90% protection product. Or in the capital protected world, Bitcoin is a phenomenal growth engine. Again, you can get about 3 times the risk-free rate with no downside risk over that outcome period. So we're seeing the whole portfolio now be opened up for whoever wants to access Bitcoin, and you can do it in a number of ways now.